Hello there, and a very warm welcome to our webinar on pensions re-enrolment and redeclaration. My name's Duncan, I'm your host and presenter, and we are joined today by my colleague Alice, who is standing by in the background, ready and waiting for any questions. Let's now take a look at what we're going to cover in the webinar. So we're going to start with an introduction explaining what your re-enrolment duties are, when you need to do it, and what steps are involved. We're going to briefly talk through the manual process, but then I'm going to give you a demo of re-enrolment using the pensions module, as much of this is automated when you run your pension assessment. So we'll be going through that, and then once we've done the demo, we're going to talk about redeclaration, which is where you declare your compliance with the pensions regulator, a few hints and tips on that, and then we've got a quiz at the end, just 4 multiple choice questions to test your knowledge, so feel free to join in on the quiz if you would like to do that. And then I'll let you know about some further support that we have available to you, and we'll spend that time at the end just going through any of your final questions. So let's kick things off by talking about what re-enrolment is. So re-enrolment is an employer duty where every 3 years you must assess if employees who had previously opted out or left your pension scheme need to go back into that scheme. Now, the re-enrolment duties will vary depending on whether or not you have employees who fall into a worker category that you must re-enroll, but it will always involve redeclaration with the pensions regulator, which must be done within certain timescales. Now, before we look at the steps that you would take in your payroll, let's just have a look at a timeline to explain when your re-enrolment date will fall and when that deadline for redeclaration will be. So it used to be known as triennial re-enrolment. It's now cyclical re-enrolment, as it's on a cycle of every 3 years. And that is based on the 3rd anniversary of either your duties start date, if you're a recent employer, or your previous re-enrolment date. Now, you can choose a date within a 6-month window, which starts 3 months before that 3rd anniversary and ends 3 months after. So date of your choosing within that re-enrolment window will be your re-enrolment date. But when it comes to redeclaration of compliance, you will have 5 months from that 3rd anniversary in order to do that. So if you put off the re-enrolment until the latest possible re-enrolment date, effectively you would only have 2 months to do the redeclaration, which should still be plenty of time. So some flexibility involved there. So it's up to you to choose a date that's convenient to you and your business. And we'll now take a look at the steps involved in completing your re-enrolment. So first of all, you would choose that re-enrolment date within that 6-month window. Step 2 would be to assess your employees and re-enroll any eligible employees who had previously opted out or left your qualifying pension scheme. And that re-enrolment process is exactly how it works for people that you're enrolling for the first time. So you'll be sending information to your pension provider, you'll be assigning the pension scheme, and you'll start deducting contributions from the first pay date after the re-enrolment date. Step 3 is to write to employees that you re-enroll, confirming that they've been re-enrolled into your scheme. And the final step there, step 4, is to complete your redeclaration of compliance. And we've got a handy guide on these 4 steps, which you can access by clicking the link at the end of this slide. So let's take a look at these steps if you were to do this manually. So if you don't have our pensions module, a lot of this is a manual process. So you will need to manually assess your employees. So employees aged between 22 and state pension age who earn more than the earnings trigger. That's the equivalent of £10,000 a year, so £833 a month or £192 per week. So if they're the right age and they earn the right wage, and they'd previously opted out or left the pension scheme, they'll need to go back in with effect from your re-enrolment date. So that would involve assigning a pension scheme to those eligible employees. And then once you've sent the enrolment details to your provider, you would need to write to your employees. You could use a letter template, which is available on the pension regulator's website. So just to quickly show you A few tips on where you can reassign a pension scheme. We'll just do a quick demo on the manual process. So in terms of the assessment, you would need to look at your employee's age and wage. We do have some reports that might help you with this. So just to point those out, I go into the main reports option here. I've added one to my favorites. It's the pensions automatic enrolment report, but you'll find this within the company folder here on the left-hand side. So what this report will pick out is any employee that's not an active member of a pension scheme who meets the current criteria. So you can see I've actually got 3 employees who previously were in a qualifying pension scheme. They've since left the scheme. So these are the ones that it's indicating on the report that would need to be re-enrolled. Now, if you want a reminder of the thresholds, if you go to company and then legislation, from the legislation settings, you'll find an automatic enrolment tab. So it's the earnings trigger that determines the wage they need to earn to be eligible. So 10,000 a year, you can see the monthly, 4 weekly, fortnightly and weekly equivalents. And eligibility age is between 22 and state pension age. So those are the key kind of bands and ages that you need to know. So once you've identified employees that need to go back in, if you are doing it manually, it'd be a case of assigning a pension scheme. So that is done via the Pensions tab within the employee record. You'd go into Manage Schemes. If they've previously been in a scheme, because they opted out, like so, you'll see the previous from and to date, and then you would simply add the scheme back on, choosing the scheme that you're putting them into, and then recording the join scheme date, which is your re-enrolment date, and active membership date, which is when you inform the pension provider. So that is how you would assign the scheme manually. I'm just going to cancel out of these screens because we will be using the pensions module in our demo today. And that is kind of it for the manual process. So that letter template, if you download our slides, you can follow that link to find that letter on TPR's website. So now that you have an idea of what the duties are, what I'd like to show you next is doing this using the pensions module. So many of you will have our pensions module, which is designed to automate the key auto-enrollment processes. So as part of your pay run, you'll be running pension assessments, and it's that pension assessment option that would actually deal with the re-enrollment of your staff when your re-enrollment date comes up. And then sending pension correspondence will deal with the letter that you can send out to your employee. The first thing we're going to take a look at is re-enrollment settings with the pensions module. So from here, there are 2 key settings. First of all, you would confirm your cyclical re-enrollment date, and it will show you the window for you to complete re-enrollment, either based on your duty start date or your previous re-enrollment date. And then there's a section for re-enrollment exclusions. So there is a rule when you come to re-enroll that employees who opted out or left a qualifying pension scheme within 12 months prior to your re-enrollment date do not have to be put back into the scheme. They can be. You can choose just to re-enroll everyone that opted out or left the pension. But if they opted out or left within the last 12 months up to your re-enrollment date, you've got the choice. You can leave them out of the scheme on this re-enrollment cycle. So you'll choose to either include them or exclude them from the assessment. And then there are also some individual exclusion reasons which we'll come on to in the demo. So let's take a look at where you'll find those settings. So I'm back into Payroll. I'm going to start by going to my company tasks. And then from here, we'll find our pensions module settings. Now in this particular demo, my duty start date was nearly 3 years ago, 1st of March 2021. So I am coming up to the 3rd anniversary of that date. And you'll see that we have an option to manage our cyclical re-enrollment settings, which I can click on just here. So it suggested the re-enrollment date as being the 3rd anniversary. 1st of March 2024, but I can, if I wish, change it to another date within the re-enrolment window. So going back 3 months or forward 3 months, where it displays all of the possible dates I can choose for re-enrolment. Now, one thing to keep in mind is that if you've already updated payroll for the tax period that your re-enrolment date falls into, you won't be able to complete re-enrolment as part of a pension assessment. So if I chose the 1st of February, for example, because I've already completed my January payroll, and the tax month of January includes the 1st of February, tells me it's historical. So I can't really use that date unless I was to roll back or restore a backup. But 1st of March will be fine for me. Now, this is the 3rd anniversary, and it means that I do my re-enrolment when I assess my employees in tax month 11. But more on the re-enrolment assessment in the next section. So on to the next setting, the re-enrolment exclusions. So the default setting is that you'll include all employees in your assessment, but I've decided that I don't want to re-enroll employees that left within the last 12 months of the re-enrolment date. So I'm going to switch this setting to exclude from assessment. And then the final option here is for setting up individual employee exclusion reasons. And when you click on this, if there's an employee not currently in a scheme who should be excluded from auto enrollment for another reason, you can set the exclusion reason by selecting it from the drop-down. So for example, if an employee is working their notice period, they do not need to be re-enrolled. So to exclude them from the re-enrolment process, if that was applicable to any of your employees that had left the pension scheme, you could set them as working notice period. And then we've got other exclusion reasons that you can choose from this list. So I'm not going to set any of these up. None of these apply to my employees, but I am going to save the changes to my settings. So we've stuck with the 1st of March. We're excluding those recent leavers or recent opt-outs. And if I click onto save, I can then go ahead and save my pensions module settings. So you can access those settings at any time just from the company toolbar by clicking on pensions module settings and then manage cyclical re-enrolment settings. So let's talk about assessing your employees for re-enrolment. And the rule here is the same as what it was at your original staging date, for those of you who remember that, in that the employee must be assessed in the same tax period as your re-enrolment date. Now, if the re-enrolment date happens to be after the assessment date, contributions will be deducted from the next pay period, and those first contributions will be slightly higher as they will include a pro rata amount. So let's bring that to life with an example. So I have a payroll where my employees are paid monthly and pay date is the last day of the month. And I've chosen a re-enrolment date of the 1st of March, which falls into tax month 11. So that is the pay reference period, the tax period for this assessment. And because my pay date in tax month 11 is the last day of February, the 29th of February this year, I'll be running a pension assessment for that pay date, which will re-enroll my eligible job holders who previously opted out or left. However, because that is before the re-enrolment date, the contributions will only be deducted from the following month. So 31st of March would be my next pay date, with that first contribution including a pro rata amount representing the period 1st to the 5th of March. So with this particular setup, and it's quite a common one with monthly paid staff, it does give your employee the opportunity to officially opt out of the pension scheme before that first contribution is even taken. So we're going to run through the re-enrolment next. So I'm going to do this as a demo for you. So just returning to my payroll tasks. First thing to mention is that I'm running a monthly payroll and I've already set my process date to my February pay date in month 11. Before I go into it, I'll just point out that I have 3 employees who have all opted out or left the qualifying scheme. So looking at the pension information for employee 1, we can see that they opted out back in March 2021. so at the duty start date, effectively. I've got another employee that opted out in July 2021, and I've got a third employee who opted out just last month on the 5th of January, and they got their refund of their first contributions at that point. So because of the settings where I'm not going to re-enroll employees who opted out within 12 months of the re-enrollment date, I'm not expecting this employee to be re-enrolled. Now, everyone else is either in the pension scheme or they're not currently meeting the criteria to be enrolled. So you'd enter your payments in the usual way. Once you've done that, you would go in to run the pension assessment. And as it has detected that we are in the pay reference period that our re-enrollment date falls into, we get the following prompt: you've reached your re-enrollment date. It then confirms the settings, and it gives us one final opportunity to go ahead and change them. Now, I'm happy with these settings, so I'm going to tick the box to say I want to proceed. And then when I click proceed, it's then going to take us into the pension assessment. Now, if you don't have a recent backup, I would strongly recommend that you take one now, just in case you need to restore back to do this again. So I'm going to click yes and run through my backup wizard. I can then save the file, call it re-enrollment backup. And that's my safety net. I can return back to that point if I need to undo anything that happened in the assessment. And then you can see that the pension assessment has opened. I've got a couple of flags next to names to indicate there's been a change since the last assessment. And if I hover over the flag, you can see that this is an eligible job holder, cyclically re-enrolled this period. It's the exact same alert for employee 3, but employee 10 remains opted out, and that's because they opted out less than 12 months from our re-enrollment date. Now, hovering over the status for those that were re-enrolled, you can see that the re-enrollment date has been set to the 1st of March. That's exactly the same for the other employee. And this means that although they've been put into the pension scheme, the scheme has been assigned, we are not seeing any contribution amounts at this stage. And the reason for that is first contributions will come after the re-enrollment date, and they will include that pro rata amount. So if you want to save this assessment as a report, you can print it out here at the bottom. You could email it or export it as a CSV. And then when you're done, you can close out of this screen. It'll confirm that you've assessed your employees for re-enrollment. Your next steps are to complete your re-declaration, send enrollment files to your pension provider, so in exactly the same way you would do for anyone else being auto-enrolled, and make sure you send them a letter confirming that they have been re-enrolled. And we're going to use Send Pension Correspondence to do that. So that has now taken us out of the pension assessment. And if I just show you one of those employees that was re-enrolled, if I go to the Pensions tab, you can see they're back as auto-enrolled with effect from the 1st of March. If I click Manage Schemes, to put them back into the scheme for this second spell of enrolment. And of course, they will have the right to opt out as they did last time by following the opt-out process via the pension provider. So what I would then do is complete my payroll in the usual way. So I'd print my pay slips, pre-update reports, and I would update the records. You can then send your FPS to HMRC. If you use Send Pension Data to create files for your pension provider, that will include the enrolment files for the employees being auto-enrolled, or automatically re-enrolled, I should say. And then the final step here is to send our pension correspondence. And when I go into this option, as you can see, I have 2 new letters, the auto-enrollment re-enrollment notice. And just to show you a preview of the letter, and this is based off the letter template from TPR, just explains to them that you've been re-enrolled on this date because you met the following criteria. A little bit of information about tax relief, and then some FAQs on that second page. So we would send that to our employee once we've sent the enrolment information to the provider. And to record that that's been sent, just tick the boxes, enter the date that it's been sent. So we've sent these straight away. We've sent the information to the provider on the re-enrolment date, which was the 1st of March, I should put, not today's date. And then going to be sent by user. And if I click on to send, that is then going to allow me to print out these letters for my employees. I'll choose my printer and click OK. I'm just going to cancel out for this demo. Got confirmation that we've produced those letters. They are now stored in the historical section. So I've got the 2 re-enrolment notices, can actually filter by re-enrolment letter, so we can see there were 2 there employees that were re-enrolled. And as it does with send pension correspondence, it also saves a copy of that letter to the Documents tab in the employee record. So what will happen next is that the pension provider will set them up back on the pension scheme. They'll send out the membership pack, or whatever it is they send out. You've sent the letter to your employee to tell them they've been re-enrolled, and then they'll know about their right to opt out if they want to. And if they do, if they follow the opt-out process, you'll be able to enter those details in your next assessment. So just moving my date forward to the next pay date, which is the 31st of March. If I go back into the pension assessment screen, let's assume all of the payments are the same as last month. I just want to point out that the pension contributions have now started for the new members of the scheme. So I've got a pension contribution for employee 1. We also have one for employee 3. And if I compare that with, we've got 2 employees earning exactly the same, but the contributions are slightly higher because of that pro rata amount for this first month. And then if someone had opted out by this point, you could process an opt-out request in the usual way. So select the employee, click opt-out leave. If they had made a contribution, you could refund it, although in this case, this would have been the first contribution that was taken. So that is our re-enrolment complete. And just to recap those steps. So it's all done as part of the pension assessment. So when you do the assessment in the tax period of your re-enrolment date, you'll see the message asking you to check your settings and confirm that you're happy with them. And remember, you can change the settings if you want to exclude employees who opted out within the last 12 months. In the assessment itself, have a look for any changes, and you'll see a flag next to the employees who have been cyclically re-enrolled. But keep in mind, if the assessment date is before the re-enrolment date, you won't see contributions at this point. When you close out of the assessment, it tells you your next steps. So you'll need to send the files to your provider in the usual way. You need to write to your employees. You'll need to declare your compliance. And if you're producing the letters using our pensions module, you can get them there from the send pension correspondence option. So onto the redeclaration. So you've done everything you need to within Payroll. And just as a reminder, the deadline for redeclaration is 5 months after the 3rd anniversary of your duty start date or previous re-enrolment date. So it's not necessarily from the re-enrolment date itself, because you could have chosen a different date within that 6-month window. But within that timescale, you'll need to redeclare your compliance. And this is a process that you will complete on the pension regulator's website. So on the website, you'll see there's some information on what you need to do. It's basically providing some statistics on numbers of employees that are currently in the pension scheme, numbers that you've needed to re-enroll, numbers of employees altogether. So you will need to prepare a few stats, but there is a handy checklist that you can download on the regulator's website. So just to show you what that looks like, it tells you the information that you'll need. As you can see, a lot of it is references, contact details, and then there is a section on total numbers. So be prepared to work out the number of employees that fall into each of kind of these categories. So as I say, it's all done on the regulator's website. Once you've done that, that's your re-enrolment duties over, and you'll do it all again in approximately 3 years' time when you get to your next re-enrolment window. So that's about it really for the presentation. But we do have some time, and we've put this time aside for both questions and for a quick knowledge check. So we have a quiz lined up for you today. So this is optional, but we're going to use our polling feature to ask you some multiple choice questions and to see how many of those you get right. So let's just launch straight into our first question. So first question here is, when is your re-enrolment window in relation to your duty start date or previous re-enrolment date? So is that re-enrolment window 3 months before to 3 months after the third anniversary? Is it within 6 weeks after the third anniversary? Or is it within 1 month after the third anniversary? So when is your re-enrolment window in relation to either your duty start date, if it's your first re-enrolment, or your previous re-enrolment date? So we've had 75% of votes in, and it's looking very positive here. So I'm going to close that poll down, and I'll just share your responses. And as you can see, we've got a 100% success rate on that one. You all got that one right. The re-enrolment window is that 3 months before to 3 months after the third anniversary of your duty start date or previous re-enrolment date. So I started you off with an easy one there. Let's go on to question 2. Okay, so question 2 is, which of the following employees would not need to be re-enrolled? So employees earning below the earnings trigger, employees who opted out or left in the 12 months before the re-enrolment date, employees currently working their notice period, or all of the above. So which of the following employees would not need to be re-enrolled? Earning below the trigger, opted out or left in the 12 months prior to the re-enrolment date, currently working their notice period, or all of the above. So this one's perhaps a little bit more tricky. Again, we've had 75% of votes in, so we will close that down and reveal the results. So we've got 76% of you saying all of the above, and that is the correct answer. So if you earn below the earnings trigger, you're not eligible. So you wouldn't be re-enrolled. You wouldn't be auto-enrolled at all. If you've opted out or left in the 12 months before the re-enrolment date, you don't have to be put in. You can still put them back in, but they don't need to be put back into the pension scheme. And one of the individual exclusion reasons, if an employee is currently working their notice period, they do not need to be enrolled as well. So the correct answer there is all of the above, but partial credit to the 18% who said, well, the rest of you actually, because all of those answers were correct. Good stuff. On to question 3. So this one is, how long have you got to complete your re-declaration of compliance? So is that 5 months from the date you chose for re-enrolment? Is it 5 months from the third anniversary of your staging or duty start date or previous re-enrolment date? Or is it 6 weeks after completing your re-enrolment? So how long do you get to complete re-enrolment? 5 months from the re-enrolment date, 5 months from the third anniversary, or 6 weeks after completing the re-enrolment? Give you a few more seconds on this one. And we will close that one down as well. 70% of the votes in. Let's see how you got on. So 67% of you saying 5 months from the 3rd anniversary of your duty start date or previous re-enrolment date, and 67% of you were correct on that one. So 21% said 5 months from the date you chose for re-enrolment. Not necessarily true. It would be if you chose the exact anniversary date, but you've got that 6-month window. So the redeclaration deadline doesn't change in line with that. And 6 weeks after completing re-enrolment is the deadline for sending the letters for writing to your staff. So the redeclaration, it was 5 months from that 3rd anniversary. And one last one, true or false? So is this statement true or is it false? I have not had to re-enroll any of my staff, so I do not need to complete the redeclaration of compliance. Is that statement true or is it false? I've not had to re-enroll any of my staff, so I do not need to complete the redeclaration. So read that one carefully. A few double negatives I think I've put in that question, just trying to trip you up. Doesn't seem to be working though. The answers so far have not been fooled. So 80% of the vote in. We're going to close that one down. Let's see how you got on. 96% are saying that is a false statement, and 96% of you are correct. If you haven't had to re-enroll any staff, you still need to complete a redeclaration. Probably be a lot quicker because you don't have to do the other tasks, just need to do the redeclaration. But you still need to let the pensions regulator know that you've complied with your duties. So well done to anyone that got 4 out of 4. And that is the end of the quiz. And it's bringing us towards the end of the webinar as well. But just a few things before we just focus on remaining questions, where I'm going to run through some further support. And I also have a couple of final questions in relation to webinars in general. So you may well think of a question after you leave us today. And if you do, I'd like to point you in the direction of our online help centre, which you can access at sage.co.uk/help, then follow the links to Sage 50 Payroll. From there, you'll find an area dedicated to workplace pensions where you'll find all the information on re-enrolment, whether you have the pensions module or not. We also have other support guides available. You can search our knowledge base. You can check out our upcoming webinars and access our webinar recordings just by clicking the webinars link towards the top of the help centre, as well as watch our videos and find any contact details you might need for our support team. So do check that out either from your browser or even by clicking any of the help options that you find in your program. Other thing to shout out is Sage University, sageu.com. This is a free resource where you can complete e-learning courses, you can do online certification, and you can jump into our bite-sized learning at a time to suit you. All you need to do is to create a free profile at sageu.com and then find your way to the Sage 50 Payroll training and certifications. So great way to polish up on your payroll knowledge, and that can be accessed from our website, sageu.com. Right, so the rest of the time here is dedicated to answering your questions, which we'll do in the Q&A section. If you are leaving us at this point, thank you so much for your time this afternoon. I hope you found the session useful, and it's given you some confidence that when your re-enrolment comes round, you'll know what to do. As you exit the webinar, you will see a survey that appears when you click the exit button or when we close it down. So I'd really appreciate you spending just a moment to let us know what you thought of today's session. And again, if you think of other topics that we could cover, it's a great way to let us know as well. I'll be sending you a follow-up email, so look out for that arriving later on this afternoon. It will contain a link to the recording of today's session if you want to catch up on anything you might have missed, as well as the link to our webinars guide where you can sign up for other sessions. So I am going to go on to mute briefly just to help out with any perhaps remaining questions, and I'll come back to you when we are ready to close things down. So I'll speak to you soon. Hello everyone, and thank you so much for sending your questions and also your suggestions for our other webinar topics and what we could potentially do badges on. So badges is something that we've done in the past. We had a special series of webinars back in September of 2023 where you could earn a digital badge. It's something that we're thinking about bringing back, so hence why we're asking the questions. We are sadly out of time now though, so we are going to wrap things up. Thanks once again for joining us at the webinar today. Please do take a moment to complete the survey as you leave. Look out for that follow-up email as well with the links to register for future webinars and to today's recording. So on behalf of myself and Alice, thank you so much for joining us. Enjoy the rest of your week. Have a great weekend. Maybe we'll see you on one of our other webinars soon. Goodbye for now.